Our philosophy is a little different than that. Actually, what we do is we do multiple things. But the first thing is we don't feel like you should be paying for a financial advisor. But the majority of the population, specifically in the United States, is not prepared for retirement.
How is AI changing the industry, changing the game?
The world is changing. Embrace it quickly,
Yep.
or it's going to leave you behind.
Hello to you and yours. Thank you for tuning in to another episode of a Made for More podcast. I am incredibly excited today. My friend, my confidant, someone that I look up to in life and in business, Jack Bennett is here, sir. It's amazing to have you. One of the owners of Bennett and Porter, wealth management, insurance services, just an overall beautiful mind. I don't know if you've ever heard me call you that before. I talk to my friends and my family. I've introduced you to a lot of folks over the years, for wealth management, all things we're going to dive into today as we look to, how do we take the little bit of success or maybe a lot of success that we have and really have some financial literacy and legacy and create just that. But Jack, first of all, welcome, my man.
Thank you for having me.
Yeah.
Appreciate you. Thank you. Those are all very kind things. Appreciate you. I feel the same way about you.
Oh,
fantastic. Look at what you guys have built here.
Yeah, you're only saying that because you're on my show for right now. But no, I appreciate that.
Listen, there is like 1% of an obligation there. The other 99% is voluntary.
There's people you come across in life and they just, every time we talk, it's you bring the energy, you bring knowledge, expertise. And like I said, you really are a beautiful mind, and everything that you have done, everything that you have built, it's incredibly special. A massive insurance agency, the wealth management division. You're just a serial entrepreneur, and I know you got a whole bunch of other stuff that you're working on too. I don't know if you want to dive into that as well today. Or not,
wherever you want to go with
that.
it.
Let's just jump in and jump off. I want to talk to, let's talk to the people that are just getting started potentially in we got a couple, young folks in the room here today that are behind the camera, right? Maybe if we're just getting started, is it more important to focus on the amount that we can invest every single month, or is it really about that tenure?
It's about getting started.
Right.
Doesn't even matter the amount.
Yeah.
Right. Just get started with something.
Yeah.
Right. You go to Fidelity, go to Charles Schwab, just set up an account. Do a basic ETF, go to Vanguard, it doesn't matter.
So you're
just
saying
start
for these
with
folks
something.
just getting started, they don't want to come to you because you don't have time for them.
Yeah. Well, because our philosophy is a little different than that. Actually, what we do is we do multiple things. But the first thing is we don't feel like you should be paying for a financial advisor unless you have enough assets to really diversify them, right? And that starts somewhere between $500 and $1 million, depending upon what your annual income is, right? Before then, why are you paying a financial advisor? They can't diversify. There's not enough assets to diversify. So save the money.
Right.
In fact, we do 401ks for a lot of corporations, and we go in there and do quarterlies, onboarding, and then we do financial literacy classes, and we'll help the employees who maybe don't have that many assets, help them walk through how to put together a retirement plan, because you need more than what your 401k is, and where to go and how to do that. And we walk them through that, giving them that financial education on how to do it for free. Right. Again, don't pay a financial advisor until your assets are substantial enough to where they can truly diversify those into a lot of different classes of investments.
Absolutely. I try to talk to my, I just put the, the Rich Dad Poor Dad book in front of my kids. You know what I mean? Put the phone down, start reading this book, start educating yourself. I try to have these conversations, I feel like a lot of times like certain people, individuals, families, whatever it might be, it was almost like taboo to talk about money.
Yeah.
It's taboo to have these conversations. I know it's a little bit taboo. How much do you make? How much can you invest? All those types of things. So that's where I come back to, like you said, just getting started. I want to encourage everybody out there right now, no matter your age, no matter your kid's age, just do something. So what is the minimum barrier of entry?
Well, so let's talk about a couple of things. You just brought up some really great points. So the first thing is family, right? Families don't talk about these things.
Right.
I would encourage families to talk about things.
Yeah.
Somewhere along the line, we stopped taking care of the generations before us. Used to be grandparents lived with us, right? And they helped us raise our kids. Now we put them in assisted living facilities.
Right.
We isolate them out. They're no longer passing that knowledge on to us as well as our kids. The reality is parenting never ends. It doesn't end when they turn 18 or when they graduate college, right? And with that comes the financial literacy. It's passing on the knowledge that you're gaining through all these years, right, of living your life on how to manage your money, what things to invest in, what things are positive, what's are negative, right? Should I buy a new car? Should I buy one that's 3 years old? All these simple things that you gain through knowledge need to be passed on, right? And a lot of times we don't spend the time to do that. And so one of the companies we did start was Busy Kid, right? So we started a financial literacy company for kids. I don't know, did you know that?
Oh, of course.
Oh,
I
yeah,
did.
okay, I forgot that.
Absolutely.
So, and so Busy Kid basically was that we built for ourselves to teach our kids financial literacy.
And for those that don't know out there, this is an app right there that you can go on right now in the App Store and you get the Busy Kid app, BUSY Kid app.
Kid.
Yep.
Or you can go to busykid.com, either one.
Right.
We've run over 1 million households through it.
Yep.
And so our goal was literally, it's kind of simple. One of our partners has 6 kids, and he's building a white, a little whiteboard and putting stickers on it and putting chores on there for his 6 kids. And every time the kids fill up the chart, it takes him a week or 2 to build the new one. And his kids aren't doing chores. And his wife's like, we got to find a better solution to this. Yeah. And so he calls me and says, Jack, hey, can we use our web designer and build an app? And I said, yeah, sure. Why not? He's like, well, I want to build a chore chart for my kids. So we built this online chore chart called My Chore Chart, literally, or My Job Chart. And wife started sharing it on Facebook, and before you know it, we had 1 million households using it. It was just point driven. Now we asked everybody what it is you want. What is it you really want? They wanted to be able to move real money, but the fintech wasn't there. And so the fintech got to where it needed to be. About 2018, we built out Busy Kid, and we started doing it as an annual subscription for $48 a year. Super inexpensive, $4 a month for up to 5 kids. And it teaches you multiple different things. Since then, PNC Bank reached out to us, asked us if we'd be interested in white labeling, so we started white labeling with banks. And that's gone really well. So we white label with the banks, do a long-term lease, and the banks give it away for free. So it's not just Busy Kid, it's actually the bank's app. You don't even see Busy Kid on it. Our goal was literally not to make a lot of money on it. Our goal was to teach financial literacy for families. And that's where you start. Teach your kids to do chores. When they do chores, they earn money. If I work, I get paid. If I don't work, I don't get paid.
That's it.
And then what happens with it? The money comes in, it goes into 3 buckets: save, share, and spend. And you set up the percentage of that. Within the spend money, they attach it to a rechargeable Visa, and they can go swipe it. They can attach it to Apple Pay, whatever they want. Or the share, we have, 60, 70 different charities. Right? Some people use it for tithing for church, or they use it for charities, but you're teaching the kids to be charitable. And then the savings platform, we partnered up with a company called Apex, and Apex is the back-end brokerage, and the kids actually build a portfolio, buying stock. They can go as low as $10 and buy fractional shares and be able to build a portfolio. So when you ask about financial literacy, I think it's done through the wisdom of your parents, right? And the generations that came before you. And then you have to have a tool to actually implement it. That's what Busy Kid is. It's the tool to actually implement the lessons that mom and dad are teaching you. Because we don't learn by sitting and listening. We learn by doing habits, right?
Application, sure.
The application.
Yep.
And so the younger you start your kids, it doesn't matter how much it is. It can be $10. But I will tell you, and I'll tell you a really cool story. I'm sitting on the other side of my house. I hear my daughter start hooting and hollering. She's on the other side of the house. And I go over there and I'm like, what's going on? And she's all excited. And I'm like, what's going on? She just said, I got a 99-cent dividend. I'm like, a 99-cent dividend. I'm like, what is this? Okay,
what am I gonna do with
it's
that?
99 cents. What are you gonna do with that? And she looked at me very seriously and she says, but Dad, it's 99 cents I didn't have to work for.
Yeah.
Teach that lesson to your 10-year-old, your 9-year-old, your 11-year-old, and see what they end up doing for the rest of their life.
Yeah.
Right?
Yeah,
so teaching financial literacy, starting when kids are young, making that available, right, for free to families is what our goal is. And we're doing that now through the banks, but not just the banks. We just did our first white label with neighborhood home loans.
Awesome.
And so they're now giving it out because Dave Savage?
Nope.
He's a coach for mortgage lenders.
Yeah.
Anyway, he teaches this philosophy that you want clients to be a client for life, not just a client for a deal.
Sure.
Right?
Absolutely.
So how do you stay in front of your clients?
Yep.
Right? How do you bring value to them? Something that's going to change their life, that they want to look at it, not just a cutting board at closing.
Right.
Right?
Yep.
And so we kind of took that philosophy and we worked with Neighborhood Home Loans. They were the first mortgage company that we pushed out. And so at closing time, if they have kids, they give them the Neighborhood Home Loans app, which is essentially white label Busy Kid to teach financial literacy. And they say something like, I know it's important for you guys to be able to buy a home. I know it's important for you to teach your kids to buy a home. Here's a tool to help them get prepared for that.
Yep. I just love it. And again, it's checking so many boxes for me. Again, which as we again, as I pose the conversation of like, where do we start? We start with our kids, right? I mean, we start with our kids. Hopefully we can start doing something ourselves, right? Whether it's $50 a month, $500 a month, whatever it is, we have to get started. I can't stress that enough. But again, starting with our kids, not enough kids are doing chores. It's definitely not structured.
No.
Our generation of parents, meaning the folks around our age, are not as intentional of having our kids do the chores I think that our parents had us do, and probably their parents before them, et cetera. And again, you work, you get paid. You do good things, you do good work, good things happen, right? Let's talk about investing. Let's show them how to invest. Start having these conversations around money. 99 cents or $99, we can see the effects of us investing in the power that can have and the compound effect that can have over time.
And it's not just financial literacy. It's how many times you talk to your kids and they're coming home and you're like, how was your day today?
Right.
It was good, Dad.
Right, that's all.
This opens up conversations. I'm riding electric scooters with my son back from Dairy Queen, right? And we just eating ice cream. He's like, Dad, I think I want to invest in Dairy Queen.
Yeah.
Well, Dairy Queen's actually owned by Berkshire Hathaway. That's owned by a guy by the name of Warren Buffett.
Right.
Charlie, right? And so now you start having this whole conversation with my 13-year-old.
Yep.
When would you ever have that conversation?
Yeah.
Right? And so it doesn't just teach financial literacy, it also opens up dialogue to have conversations about things that you wouldn't normally have with a teenager or even younger.
He's like, Dad, I just like Oreo Blizzards. It's just that simple.
It is.
You know what I mean?
But I mean, how many kids hear the name, right? And have a conversation about that stuff? They just don't. And so it does open up more dialogue and more communication with your family and your kids.
Yeah.
And vice versa. They'll come to you and say, hey, I need to earn more money.
Yeah.
What kind of chores can I do?
Those are the things, these are the things we're talking about, right, that we should be doing. What do you hear in this industry that's just like flat out wrong? Like wrong advice, wrong strategy, mistakes do you think that people are making right now?
You mean that people are out pitching or people are just doing? I think a lot of people that their income is not six figures and it's below that, and their employees, they have this idea that their 401k is going to cover their retirement.
Right.
Right. I hear that and see that all the time, and that's just not the case.
Sure.
People need to make some really hard decisions.
Yeah.
I can't buy brand new cars. Maybe I can't afford that home. Maybe I need to rent a little longer, or maybe I need to buy something a little bit smaller. The earlier that you start your plan, the more you'll end up with. But the majority of the population, specifically in the United States, is not prepared for retirement. When they go into retirement, they're short on money. So I think a misconception for sure is that my 401k is going to take care of my retirement, and it's not. I think that's why we take the time to actually do that little education thing. What is it you need for retirement first? What's your 401k going to be? What percentage of that? And then what do you need to add to it? I think that's a very big misconception.
Is there somewhere that people can go or to paint this picture, right? So when you look at, okay, my 401k, how much should I be contributing to that? How much am I going to need? What percentage of my income should be going to that? What should be going to my home expenses? What should be going to my life? Is there somewhere where you can paint this picture?
There's a lot of websites that you can go. It actually is that easy. You can go to about any website and you can break that stuff down. You should start with your retirement, and then you back into all the rest of your expenses, right? It's not like what percentage should my home be. It's like, what do I want my retirement to look like? How much money do I need to be putting away now in order to equal that? Once you know that amount, then you can spend the rest, right? You need that amount, and then you need a little cushion, 6 months, right? Listen to Dave Ramsey. You got about a 6-month cushion, right, of cash that should be sitting in there at any time. And then the rest of it you can back into, okay, well, this is how much money I have left each month. Out of that, what percentage do I want to go towards car payments and insurance and everything else? But you need to start with the basics first, right? And I think that starts with the retirement. How much money can I put to retirement? Then my insurance costs, make sure life insurance is in there so you have something for your family, right, if something happens to you. And then once that's done, now what do I have left? That's what you can afford for a home, right? That's a misconception as well, right? And I don't know if we want to talk too much about realtors and mortgage, but at the end of the day, right, we all sell something. We're selling ourselves every single day, regardless of what we're doing, right? And as a realtor, you want to sell the home that fits that person and their needs, right? And a lot of times people's ideas are bigger than what they can really afford, right? So maybe they can afford on paper $1 million home, but the reality is they haven't set aside retirement. They haven't gone through these basics. They don't have trusts in place. They don't have life insurance in place. They don't have all the necessities that you really should have for your family to perpetuate, right? Once they've done that, then they can see how much they can afford. Now they can tell them how much they should qualify for, $600,000, $500,000. Right now we have a mortgage guy that gets paid more when he does a larger loan, and a realtor that gets paid more when they sell a bigger home. So we're incentivized to do that. And it's just the way that the world works, right? We all want to sell the most that we possibly can. It's up to the individual consumer to be able to say, hey, this is what I can really afford. Not necessarily what I can qualify for, but this is what I can really afford, and be able to back themselves into that. And for that, I would suggest going to a lot of different websites. You can go to Fidelity, you can go to any of them, and be able to figure out what those percentages are. They're pretty easy to do. Or call a financial advisor, call a CFP, Certified Financial Planner, which is what everybody is at our firm. We require that. It's like a master's degree, because they have more of a holistic approach. It's not just investing. It's, hey, let's look at everything. Your trust, your life insurance. We want to make sure that all these different places, things these pieces are in the right place for you. They can help you sit down, create a plan, and then you can go and implement which size house I should be buying, what kind of car I should be buying, what my budgets are for these different things, right?
I think that, I'd sorry to cut you out. I think that's the biggest challenge or mistake that I think people make, if I was to be asked that question, is everything that you just said right there is not how people look at their overall financial picture.
Yeah.
Right? They don't look at all these things. Again, my background in the real estate industry, a couple thousand agents and everything else, but I'm in a lot of different industries as well, as you know.
Yeah.
But I'm just talking to general consumers, friends, family. I think this is a mistake that, again, being in the business to a degree, we'll say, what do you qualify for is largely different. And it almost comes down to like a pride thing. Oh, I want the $1 million house and I can qualify for it. I'm going for it. Like, I need that. And then how many people do you hear out there that are, what do they say, house poor, or, you know what I mean, or the pouring too much of their cash flow into their home on a monthly basis? To me, that's a mistake.
Well, it ruins your quality of life.
Right.
Right. You think you're going to get a better quality of life because you're getting a nicer home.
Right.
The reality is you have no money left to have a quality of life.
Right.
Right. So now you're cutting back on how much you eat out. You're cutting back on vacations. You're cutting back on activities for your kids. You're cutting back on things because, I have this expensive home. I thought all my numbers were fixed. They're not. Your payment's fixed maybe for 30 years or 15 years, but your insurance fluctuates, what the cost is on that. The maintenance hits you a lot more than you thought. And all you have to do is look at the last 4 or 5 years and the cost of maintenance and service, right? Everything's doubled, right? So you thought you bought this house that you could afford that no longer you can. And so it's a quality of life. It's not just, can I retire? It's also, what is my life like until I retire?
Right.
Right? You got to get the ego out of these decisions.
Yeah.
Everything we're talking about, once you reduce the ego,
Yeah.
the decisions become very clear.
Yep.
Right?
Yep.
You have to become analytical.
Yeah. Right.
It's the numbers. It just boils down to the numbers.
Absolutely.
Right?
Yeah, and it's sacrifice now or sacrifice later, and I'm a firm believer, one of my favorite lines is, we're as young as we're going to ever be, right? Like,
Yeah.
I want to live my life and I want to enjoy, the fruits of my labor and all those kinds of things, but at the same time, at what expense, right? And am I sacrificing my future for today's enjoyment?
Yeah.
And I think that, again, I come back to, like, there's this ratio where it makes sense, or a financial equation or a math equation where it's, how much can I enjoy myself at the same time being able to prepare for the future, right?
Yeah, I mean, I think all the statistics show that happiness doesn't just come from money. There's a certain baseline that you need to have a quality of life. If you manage that well, it's about friendships and relationships that bring the happiness to you.
Sure.
How many people do you know that have a lot of money that are unhappy?
Right.
The majority of my friends.
Yeah.
Right?
Yeah.
It's
if they need something to do with that money, they know.
I know.
You know what I mean?
When you sit down with somebody in their conversation, like us, when we sit down, it's like, hey, how's the family? What's going on? Partners, business, a little bit, and then it's like, what is it you're working on? What kind of new business are you doing? Like, that's the conversations. What's going on?
Yeah.
That's the conversation we want to have.
Yep.
When you're sitting down with somebody and it's like, what's the next thing I'm going to buy? Oh, dude, I'm buying this car. I'm buying this. I'm buying that beach house. I'm doing this vacation.
Right.
I'm not interested in talking about that. That you're just going after all the materialistic things. You don't find happiness in that. That's someone that is lacking the happiness and trying to find it through materialistic things.
Yep.
It doesn't happen that way,
Yep.
right? And I realize that buying businesses or building businesses might seem like our dopamine rush,
Yeah,
right?
right.
But you're trying to improve yourself because each one of those comes with a whole list of challenges.
Yep.
Right? Anybody that's ever built a business, all these realtors that are around you, they're building their brands, right? And building this up. It is not easy.
Sure.
Nothing is easy. Nothing comes easy.
Right.
Right?
Yep.
It's always twice to three times as hard, and it always takes 2 to 3 times as much money as you thought that it was going to be,
Yep.
right?
Yep.
But through those, we actually progress. And in my eyes, the goal is to maximize your potential, not to maximize your things. The things don't bring the happiness.
Yeah.
Financial independence gives you the ability to go after what you really want, which hopefully is maximizing your potential, whatever that is. For us, it's building businesses. Maybe it's a charity thing. Maybe it's focusing on your families or your grandkids or whatever that is, right? Have it be something that's positive. That's how you get true joy,
Yep.
right? The money gives you the flexibility, managing that appropriately. But more doesn't mean happier.
Right.
Just means more problems typically,
Yeah. Yeah.
right?
I mean, now that we're on the Made for More podcast, more freedom is how I would speak to that.
Yeah.
To me, money doesn't buy happiness, but it provides freedom, the freedom to do the things that I want to do, the freedom to say yes to my kids when they really need something, when he needs a $400 bat, like yesterday, my 16-year-old needs a new, Dad, my bat is dead, right? It's dead. The season's about to start. Okay, well, I'm thankful that we can go out there and do that. And I can say, yeah, I don't say yes all the time because obviously I'm not trying to set that precedent. But the ability and the freedom, and then like you said, it's the conversations that we have. What are you doing? What are you working on? What are you building? The businesses, et cetera. I mean, these are the things that create accomplishment. These are the things that set the soul on fire, right? And have a sense of purpose, right? And again, if we're pouring into people, pouring in value, then the successes will come, then the money comes. And I know you do that, right? I mean, you're doing that constantly. That's why, again, whether we're just talking on the phone or whatever it may be, you're focused on that. You're focused on adding value and hence why we wanted to have you on this very show. So I want to ask you now, one of the things that I've loved about you is that it's not this like one size fits all type of an approach, right? It's not, a lot of, wealth advisors or financial advisors are kind of like they want to be safe. They want to like put you in the cookie cutter type of a scenario. But for the folks like me, or a lot of others out there that want to get outside the box, what are some things that you like to talk about, you like to work on, you like to focus on that are outside the box types of investments that aren't those cookie cutter type things?
Listen, everybody's going to have outside the box things. The question is whether you should be in them or not, right?
Right.
I'll tell you some of the basics of what we do, though, and it doesn't take a lot of money. But what we think is that everybody should create their own pension if they can. There's a way to do that using some life insurance, and we're not huge life guys, right? We're financial guys. We typically use term
Create
policies.
their own pension. I haven't heard this one. Okay.
Create your own pension. You've seen it before. It's utilizing the Kaizen product.
Oh, God. Okay.
Right? Using a life insurance product. And I think that fits with about 99% of the people that we talk to as part of their whole financial plan, right? By utilizing a life insurance policy, we use a IUL. We have the bank match what we put in. It's called a premium finance life insurance policy. But most of the time when we see those done, they're over leveraged. They're not being done correctly. They're being done for a large commission for a life guy. If it's done correctly, you do a 1-to-3 ratio. So think of it like this. I put $25,000 a year into it. The bank matches $25,000. I'm borrowing at like 5%, but I'm averaging 7.5% to 8% on that money and returns inside the policy. So I'm making 7.5%, 8% on the $25,000 I put in there, and I'm making the arbitrage between what I'm borrowing from the bank at about 5% or so, and that 7.5%, 8%, making 2.5% to 3% on their money as well inside that life policy. It's like turbocharging it. I put in 25, they put in 25 for 5 years. At the end of 5 years, the bank puts in 50,000 for another 5. So at the end of 10 years, you're at a 1-to-3 leverage point. Let that sit there for about 20 years. 15, 16 years in, you pull out, you borrow the money from the policy, pay off the bank, let it continue to grow. When you hit 65, depending upon when you start that, you'll have hundreds of thousands of millions of dollars you can pull out completely tax-free on the back end. Now you've created a baseline pension for yourself by utilizing insurance companies, right? Anybody can do that. It's a minimum of $25,000 a year. But if you go above a 1-to-3 ratio, now all of a sudden you have to collateralize it, If you stay at a 1-to-3 ratio, you don't have to collateralize it. The life insurance policy and the cash that's in that actually collateralizes the loan, right? So I know it sounds complex. It's really not. There's a company called NIW in Dallas that structures that, puts it all together for us. And the key to it is that we take the commissions over 10 years. So it's very small commission. It's not very profitable for us, but it's it's one leg to a whole stool and a plan that we create for them. Now you have some money that's very conservative set to the side. You have a 401k or something along those lines. And by the way, that life insurance policy has almost all the benefits of a 401k. It's protected from creditors. You can go bankrupt. No one can touch any money that's inside your life insurance policy, okay? And it grows. And you can pull it out tax-free, which is actually better than the 401k by doing a loan, right? And having that payoff of the death benefit at the end. So I'm not a big life guy, but we do that one life insurance policy. We don't typically do even permanent policies. We typically do term and invest the rest. But I think that's a great, unique way. I would consider that to be somewhat of an alternative. Took us 18 months of research to come across that product, by the way. Life insurance guys don't like to sell it because the commission's taken over 10 years. Right? But for us, it doesn't matter. We're managing your money, we're doing your insurance, we're doing 10 different things with you. So it's just one piece of all of it. So being paid over 10 years makes no difference to us.
I love that policy. I love that approach. I've never heard you say like creating your own pension, but I mean, it just makes perfect sense. And I can't imagine 99% of the agents out there are not doing that. They're not creating their own pension. I mean, again, made for more. This goes outside the real estate industry. This goes outside, mortgage and finance. I mean, again, into this wealth management type of a situation. Independent contractors, individuals out there, this just makes so much sense.
So you asked me about alternatives. That's one of the things I would do would be a Kaizen product. Okay. So I would add that into the mix. And I think what I was going to say, and I don't know if I mentioned this the last time we were talking, but it's for everybody, not just independent contractors.
Right. Oh, sure.
How many companies have pensions anymore? They have the 401k, but they don't have a pension anymore.
Yep.
Right. And so that can really help you replace that. And it's tax free. You can be.
I mean, it's for everybody, no question. I mean, high net worth, low net worth.
Yeah, 25,000 is where it starts.
25,000 minimum per year for 5 years.
For 5 years.
Bank matches that, and then does an additional 5 years beyond that. So it's essentially a 10-year funding.
Yep.
Correct.
You only have fund 5 though.
Fund 5 is the individual.
Some guys will do another policy at the end of that 5 and have compounding ones that will then all mature a little bit differently as they get into retirement, depending upon their age.
Got it.
But I have guys that fund $500,000 to $1 million a year into it, and the bank matches that, right? So
is there no limit?
No, there's no limit. So you can go as high as you want, as low as you want in there, and they match that. It's actually super conservative. Yeah. The money's protected inside the policy. It's put into funds that are super conservative.
Yeah.
They're being restricted by the insurance division.
Right.
So that money needs to be able to be liquid at any time in case somebody dies. There's a death benefit. They got to be able to pay it out.
Yeah.
So super
if folks
conservative.
Don't have the funds to fund this, but they want to get into it. I mean, again, it just comes down to a math equation. I mean, if you were to borrow the money to fund this, right?
Yeah. I mean, you're going to want to look at there's a lot of different things to look at with that. But let's say that you want to do $25,000 and that's a $125,000 commitment over 5 years, right? And let's say that you can afford a $800 a month payment or whatever that is. Maybe you want to pull a HELOC on your home. Fund that because it's getting better returns.
Right.
And be able to make the payments on your HELOC and pay that off over 5, 6, 7 years. Meanwhile, you've been able to invest it in a tool that over the next 20 years is going to get you towards retirement. Something along those lines might be helpful to you, right? To be able to afford it, to fund it. Because the earlier you fund it, the more years it has to grow.
Yeah, sure.
20 years we kind of look at as the minimum.
Right.
You can look at 15 years, but we like 20 years to have a cushion because what we really want to look at in there and what you don't see life guys ever look at when they show you illustrations is we want to look for black swan events. So Great Depression, hyperinflation in 1980. We've gone through and illustrated what that looks like. And we know that we need about 20 years for these policies to rebound if we have one of those black swan events.
Got it.
Right? And so, but if, let's say you buy it at 30 years old, you have 35 years till you retire, or 37 years, or whatever it is that you want to do. That's a lot more compounding interest. You're going to do a lot better and you have way better returns. But having that small piece, anybody can do that as long as you can come up with 25,000, right?
Yep.
And there's a lot of different aspects of all that we can get into. But I think that's a good alternative that's not too far outside the lines. But there's a lot of alternatives that we do, right? So get more into the high net worth. I don't know where you want to go with it.
Sure, take me any path you want. Let's
so
hear it.
we do that as part of the high net worth, but then our portfolios are 60 to 70% market driven, customized for each individual, and then 20 to 30% alternatives, which are in there. But we use a specific type of alternative that you can be in and out of every 90 days. So you're not stuck like an Evertree fund investing in a REIT that's stuck there for 5 years or 10 years until they sell or they recapitalize, right? These you can move in and out of every 90 days. And as a result of that, you can be liquid, but it gives a lot of balance to your portfolio. So when you see the portfolio is moving up and down like this, these are just steady Eddie, 6, 7, 8%, sometimes 9% in these alternatives. That helps to bring balance in there. So we don't see the big pitfalls and adjustments in the marketplace with our portfolios typically. That's kind of a nice baseline that you have in there. And then we start working on tax strategies and tax structures. So when your income's $1 million plus, we focus on multiple different things. I won't get into all of them, but basically some of those are investments that can wipe out a lot of your income through bonus depreciation, create cash flow and additional wealth, and reduce your tax burdens. We run out of that every year with a waiting list, typically about $100 million of waiting list, and we'll do about $400 million. We did about $400 million last year. This year we'll do about $500 million of that with customers. That's about 90-day window at the end of the year. We typically will do that. So, those would be alternative investments that also reduce your taxes, that also give you cash flow and long-term assets, right? So, alternatives is from here to here, right?
Sure.
From a REITs to anything else that you can possibly think of, to a startup to, all these different investments. I wouldn't suggest that for 99% of the people.
Right. Yeah.
Right. Stay focused.
So you kind of mentioned this already, like, one of the biggest, mistakes people make, thinking that their 401k is going to be enough for retirement, but what's kind of something else that like separates that person when they're getting to retirement age and they're like, well, am I really, really ready, versus the person that gets there and is like, I'm good to go?
Well, there's a couple of things. Everybody talks about the financial piece, which is definitely probably the most important thing, right? Do I have enough money to really retire? But man, we're living a lot longer than we thought we would.
Sure. God willing, right?
Yeah. And inflation is adjusted. We've had quite a bit of it. It's slowed down quite a bit, but still it seems like once you give it, it's hard to take it away, right? Mm-hmm. So now all these service guys and everybody's making way more money. It's really hard to start having them reduce their rates to bring back some of the inflation. So
you have the lifestyle, right? I imagine, right? Like, I'm used to living this lifestyle, right? And I don't want to have to go back to some other lifestyle when I get to retirement age, right?
And most people do.
Right.
Hopefully their house is paid off and they're ready and accepting, because they're so tired of working.
Right. Yeah.
Right. They're willing to accept that they'll just have a lot of free time and maybe have less extra money to spend. But I think a lot of times they make a mistake thinking that they're going to have enough money. Health bills come up. Assisted living costs way more than you ever think that you'll need. Everybody thinks they'll die in their home and not need assisted living. That's not the case. You can buy some long-term care. But I think the biggest thing is not just the financial aspect, it's the emotional aspect. They think they're ready to retire, and then they go into retirement, and then they're twiddling their thumbs. What am I going to do? I retired at 65. I end up living until I'm 90.
Right.
Yeah. 25 years of twiddling my thumbs. What am I going to do with myself?
That's a long time.
I think it's a long time. And so we encourage a lot of our clients that if you're going to go into retirement, create a plan. What is that going to look like? Not just a financial plan, a plan for you emotionally. What are you going to do with yourself? How are you going to stay productive? After you've traveled the world and gone to all the different places and seen the grandkids this year, what are you going to do for the next 25 years? Right?
It's a tough question.
It is. Find a purpose.
Right.
Because the purpose is what keeps your brain going. So it keeps you motivated. It's what wakes you up in the morning.
Yep.
Staying healthy, exercising with your spouse or your partner, your significant other, whatever that is, I think is super important. But I think you need a purpose. I think that's what drives all of us, is a purpose.
100%.
And so when I see people wanting to retire at 65, 67, like, I don't have a date that I'll retire.
Yeah.
Right? I'll probably work forever doing something because I want to stay productive. That keeps my mind going. It keeps me interacting with interesting people, right? And with younger people.
Sure.
Youth, right?
Yeah.
To keep me my knowledge up to date with technology and what's going on in the world and education. And when you're doing business, you get to be around all of that.
Yeah.
Whatever level of business that is. So I'd encourage people not to be striving for retirement. Just be striving for financial freedom, and then strive to be productive and find things that interest you. Right? But don't think about retirement. It's not as great as you think it is.
Yeah.
Right? How many people, retired early and they became an alcoholic, they're cheating on their wife. Like all it is
Yeah.
that, idle hands are of the devil.
I always say, I don't golf. What am I going to do? You know what I mean?
Yeah. And how many courses can you golf?
I-
Now, my partner golfs, and he'll love to try every single course in the world, I'm sure.
Yeah.
But even he will get tired of that. And he's.
But I'm with you. It's like, what are we going to do? We need purpose. We need to, I was very fortunate to have a great grandmother who lived 105 years old. She actually passed on her 105th birthday.
Oh, wow.
And I used to interview her on her birthday all the time, like just try to ask questions. I have it all saved. And one year I just remember asking her, like, how do you get, I think it was on her 101st birthday, how'd you get to be like, what's the key to get to 101? And her thing always was never stop working, right? Never stop working.
Yeah.
Like she, always having something, working on a project, working on something, of having like some, a purpose, like you said, of something you're trying to accomplish.
It is. And maybe it's just a charity.
Yeah, right.
Right? Maybe it's a charity that you want to be involved in, you want to spend your time with. Whatever it is, it doesn't matter.
Yep.
Stay involved with something. And I think 99.9% of people don't think about that when they're going to retirement. It's all the financial part.
Yeah, yeah.
Right? And the reality is the financial part's really easy. Start it early, back into the numbers.
Yeah, and maybe this is something that you need to build your financial, future around. Is that what are my interests going to be? Because if it is golf, like I said, I'm not a golfer, but that's not cheap.
No.
Right. So like factoring in those things, right, or whatever it is of traveling and getting around the world, whatever those things may be. So I can't keep going, obviously, on this. Well, I can't finish this interview with you without talking about everybody's seemingly favorite 2-letter word or abbreviation right now. AI, of course.
Yeah.
How is AI changing the industry, changing the game? Maybe it is an investment opportunity going to the future. How do you look at that as a whole?
Watch out.
Yeah.
Watch out. It's coming for us. So listen, it's just like anything else. So you can either deny the change, put your head in the sand, right, and it's going to pass you up, or you embrace it. I think we've chosen to embrace it. I'll give you some specific examples.
Yeah, please.
In the insurance risk management division, right, which we've talked all about growing assets, but not about protecting assets. We need to talk about that. We can do that later, or another topic. But we found that 5 tasks in servicing for personal lines. So let's say you got a house, an auto, and a home, an umbrella policy with us, right? And you call up, you want to add a
Everybody should have an
vehicle.
umbrella, right?
Everybody should have an umbrella.
Yeah.
Yeah. If your assets are 600,000 and above, you need an umbrella.
Yeah.
So that's the rule of thumb in the insurance industry.
Okay.
I would say that everybody needs an umbrella, regardless if you can afford it. You should pay for it.
Yep.
You never know. And I can give you 1,000 examples, real examples of clients that have gotten in accidents in which they had more liability coverage.
Yep.
Because insurance isn't just to protect you; it's also to protect other people from the mistakes that you make.
Yep. Sure.
Right? You want to be able to make them whole.
Yep.
Right? When your kids gets in an accident, you don't have enough coverage to take care of the people that they hurt. You'll wish that you had. You can still be sued. They can take your assets, right? But above and beyond, regardless of how detrimental it potentially could be, you just want to make other people whole from the mistakes that you make, whatever that is in life. And insurance gives you the ability to do that at a very inexpensive price, relatively, compared to what the outcome could be. But anyway, when you think about AI, what we did is we took our company and we said, hey, how can we integrate AI into a lot of different aspects? But the first one is servicing is a major part. You call up, you want to add a vehicle, subtract a vehicle, add a lien holder, a mortgagee clause, any of that. And we found 5 tasks were 70% of our service, right? Then we went into the industry and started looking at all the insurtech. No one had integrated any of this into AI. So we started coding about a year ago. And we have about 25, I think, insurance companies in our personal lines division alone. And right now, 7 of them are those 5 tasks are completely automated, and we're adding a new one every month now. But we actually had to sit down with insurance companies, and they're so antiquated that being able to get the data from them was not easy, right? But integrating that in will reduce the amount that our clients will have to wait on phones, the amount of customer service people, account managers you need. Right. And so, but for us, that's a great problem. We won't actually be getting rid of people. We'll be repurposing them in other divisions where we actually need more help and are having a hard time looking for that. Right. So as long as they're a quality employee, which all of ours, I feel like our team's really solid, been around for a long time, we'll end up repurposing them into other divisions instead of going and finding new people to get them trained. They're already a part of our culture. So people need to understand that. Don't be afraid of AI. Embrace it, learn how to use it. Right. The companies are going to embrace it, because it's going to reduce overhead. But one person can do the work of 10 people now utilizing AI. And in our case, 70% of our customer service will be able to be done 24/7 directly with our clients. You'll be able to go online, or you can call up through the phone system, add a vehicle. The bot will go into our management system, make the change, then go into the carrier, make the change, and bring you back the premium adjustment, and then email you or text you an ID card on adding a vehicle. You can call at 9 o'clock at night from the dealership when you're getting hard clothes from somebody to buy your new Toyota Camry or whatever it is, right? Or you could call on a weekend, which is, that becomes difficult to get serviced when you got to call between 8 and 5 with the insurance agencies, independent agencies specifically, right? This gives them the ability to do that. We're actually implementing the exact same thing on our commercial as well. But I think we're the first agency in the country to have that done, is what we've been told by the insurance companies. I know that actually because there is no process. When you talk to the tech teams at Travelers and Safeco, all of them, they had no way of integrating with us. We had to actually create these systems. They had never been done before. So we've embraced it, and I'm using that as an example. If you look at Busy Kid, we have a little dog we're integrating in now where the kids can actually build savings plans, and hey, I want to save for a car, I want to save for a scooter, I want to save for this, and asking financial literacy questions, right? What's a FICO score, right? And so we're utilizing AI on that will actually have a full integration. I think that launches in the next 30 days actually. Awesome. So we're integrating that into everything. We've integrated it into our financial advisory. We've actually created a portfolio. We have this great client, and he's like, I want to use complete AI with this amount of money, and I want to be a guinea pig, and I want to work together. So every month we have a meeting, and we actually utilize all these promptings that we've started customizing, right, with multiple different AI platforms to give us an outcome. And then we've been following that investment to see if it beats what our standard portfolios do, right? We have an AI portfolio that's spread out amongst all the AI companies, right? And it does really well. It's been doing, 18% or something,
wow.
Right? 20%. And so we're doing one on our own, using our own promptings and testing that to see how it does. And so far it's outperformed the other ones, but it has bigger swings, right? Because it's mostly AI driven. So we're fully embracing it, and we think, between that, self-driving cars, Musk, right, data centers in the stars, which is where we're going, and we know a little bit about that. We have processing centers and across the country that we invest in and create and build and lease out for data and processing power for the big tech companies. The world is changing. Embrace it quickly.
Yep.
Or it's going to leave you behind. But if you embrace it and you learn it and you understand it, I think it can be amazing. I think people are going to be disrupted for a minute in jobs. We're definitely going to have some people that are going to need to find jobs, right? If they embrace the technology, though, what we'll find is companies are just moving at an exponentially faster pace, right? If I have 100 employees right now and I can get 10 employees to do the same people as the 100, do I just want to keep the 10 and just replace the 100, or do I want to teach all 100 to be 10 times effective? And now you have an equivalent of 1,000 employees, but you got 100. I could do 10 times more business with the same amount of people, right? So learn the AI, make yourself efficient in that, and make yourself a tool that can be used for yourself or for somebody else, right? And then you'll always have job security because you'll be self-sufficient.
Yep, love it. I mean, clearly you bring the knowledge, you bring the expertise, you're an open book, you just add value everywhere you go. Clearly you bring the energy. I'm feeling real good on this energy right now, by the way, myself. You gave me this piece of gum that I'm like really loving right now. I'm feeling good. Actually, what is this? You should share this with everybody. What is this gum that you have?
I'm going to share it. Listen, I picked this up from Joe Rogan. It's the Neuro gum.
Okay.
And he said he used it. I've been using it for a couple years now. My wife buys it in boxes for me. I don't even use coffee anymore. This is all I use.
No coffee?
No.
Just Neuro gum,
That's
huh?
it. No,
okay.
No. Neuro gum.
Right.
Jacked up all the time.
Hey, I mean, I've never heard a better endorsement than from a guy like you with a Neuro gum. I imagine that you don't want the whole world reaching out to you, right? I know you have, but for the folks that might want to, maybe what do you think? Maybe they could reach out to us. We can connect them with you if it makes sense, or how do you want to go about that?
They can connect with you. They can go to bennettporter.com. They can reach out through there and do
We'll provide some links down here and some info for folks, or maybe we create a little submission where folks can, send you, kind of a little bio about themselves or something like that. Because again, I know you don't take on the whole world. Appreciate you doing things like this where you're just coming on and add value. I feel like we scratched the surface today, so maybe we have you back. Maybe we have you as part of like a panel or something like that. like I said, I kicked this off with saying you're a beautiful mind, and like I said, we scratched the surface with that today. I know there's a lot of other things we could have got into, but we go for hours on this Made for More podcast. But Jack, I want to thank you for your time. Thank you for coming in. Any last minute tips, tricks, advice, something that you wish you would have known? Next generation, anything else you can think of?
We'll talk about that next time. But thanks for having me. It's been a pleasure. So fun.
Yeah.
I mean, chatting with you is just like, just chatting with buddies. It's great.
Easy, man.
It's easy. I appreciate you.
Appreciate you, brother. All right.
Appreciate you. Thank you.
Yep.